Another day, another record for the Dow, making it 3 in a row. The big question, will non-farm payrolls derail the rally? Those numbers out at 13:30 GMT today. Ahead of that, we've already had some upbeat trade numbers out of China. Exports there beating forecasts in February. Does this mean China's economic revival is on track? Let's get to Tara Joseph in Hong Kong. What is the consensus, Tara?
Well, Axel, not only did these beat expectations, the export figures that came in were more than double what people had expected. Now, there is a bit of a warning label on these figures because it was around Chinese New Year, and it is notoriously distorted times in terms of the figures. But what really did show up is that exports to the United States, to Southeast Asia, and electronics exports really surged. So there is a sense that momentum is growing in the Chinese economy. We have more figures coming out over the next few days that are expected to show the same picture. Again, the warning label, however, and imports were very weak. So that caught people off guard as well, wondering what's going on internally in the Chinese economy.
OK, Tara, many thanks. Let's get straight to Richard Hunter, head of equities at Hargreaves Lansdown. Talk about these non-farm payrolls, the impact that might or might not have on the equity markets. Morning to you, Richard. How you and I talk about the equity markets a lot, but how fragile is this rally to you now?
There does seem to have been something of a shift in sentiment towards the positive this year. I mean, these record highs obviously haven't happened overnight. We had the initial fillip in the first trading day of January after the US fiscal cliff was averted. But on the basis that obviously corporate earnings remain strong, which actually means that on a historic basis, the market isn't overvalued at this stage. Obviously, we've got the QE punch bowl, which the Fed will not remove until such time as the US economy can stand on its own 2 feet. And of course, overarching all that, I think investors are coming round to the realisation that the negative real returns they're getting on cash, they need to look at other asset classes for some kind of yield, let alone the potential for capital appreciation. And equities seem to be the asset class of choice at the moment.
We're looking for, what, 160,000 added on the non-farm payrolls. If we don't get that, could it hit equities hard?
Well, as with anything, you're absolutely right, Axel, of course. If it was to be well shy of that figure, the market would unquestionably react because, of course, quite apart from the Chinese numbers you've just mentioned, investors are putting a lot of store in what seems to be a growing US recovery. I mean, obviously, the housing market is showing some real signs of life, which is important to the US economy, and that would also underpin the resilience of the consumer, who's actually been remarkably robust throughout the crisis. So it remains probably and arguably the most important economic piece of economic data that we can see.
What's your target on the FTSE now?
We haven't got a target as such. We continue to say to keep the bottom up approach, but certainly in the year to date we've already seen a 9% rise in the FTSE 100, and that's quite apart from the dividend income you can get on top of that. So,
but how far can the bottom up approach push the index?
Well, the fact of the matter is, as we're seeing with the shareholder activists in Apple at the moment, quality companies are sitting on more cash than they know what to do with. Sooner or later, that's going to have to be deployed, be that M&A, increased dividends, share buybacks, or indeed investment in new technology and indeed staff.
Buying any financials?
Financials, well, interestingly, already, as you might expect, there are already calls that maybe Aviva had a share price reaction yesterday, which was overdone. Even after the adjusted figure, partly due for a technical reason on the share price, the shares are still yielding nearly 6%. Clearly, there's a lot to do in terms of the transformation programme, but I think investors are realising that yesterday's price fall might have given a good entry point.
Richard, thanks a lot.
Pleasure.
Corporate news, staying with the banks, Goldman Sachs and Morgan Stanley just scraping through the US Fed's stress test, meaning the two Wall Street banks look relatively more vulnerable should another financial crisis strike. Citi was the strongest of the top 4 US banks and has asked to conduct a $1.2 billion stock buyback in the first quarter of 2014. In world news, the funeral of Venezuela's Hugo Chavez takes place today, with some 30 heads of state due to attend. His body will then lie in state before being embalmed and put on display at a military museum, a move, they say, reminiscent of the treatment of communist leaders Lenin, Stalin and Mao. Kenya's presidential race has tightened, with the prospect now of no outright winner opening the way for a tense second-round runoff between the PM and his deputy. Counting continues with about a quarter of constituencies still to report. And tensions remain high on the Korean peninsula after the UN on Thursday imposed new sanctions on the North aimed at curtailing its nuclear and ballistic missile programs. China, the North's only major ally, has backed the measures, saying it wants them fully implemented. That is it for this morning. I'll leave you by marking International Women's Day with pictures from the city of widows in Uttar Pradesh. In India, when a woman's husband dies, she is traditionally expected to give up pleasures like wearing colourful clothes and can face severe social discrimination. But at the ashram, hundreds of abandoned widows are given healthcare, education and vocational skills. I'm Axel Threlfall. This is Reuters.